What's good, YouTube? It's your boy Playmaker Way with the playbook, and y'all read the title, man. Use this simple compounding strategy to grow your account quickly. All right. If it's your first time on the channel, welcome. I appreciate you giving this video a chance. Go ahead and hit that bell and sub button because we don't just post weekly content like this, but we live stream and live trade daily. London session 3 a.m. EST, and we're also live on TikTok's most New York sessions. If you don't follow me on TikTok, here's the TikTok on the screen. Go ahead and hit that follow button. I also post daily on there. So before we get started, I just want to put this disclaimer out here. What we're about to break down, this is for traders that have a good setup. Y'all taking trades, y'all are mostly profitable, if not consistently profitable, and you're trying to take it to the next level. If you're brand new to trading, I know you're not going to want to hear this, but it's the truth. You just got to suck it up. You should not be worried about entering trades right now. The first thing you need to do, all right, I tell my members and students all the time, trading consists of 3 parts, all right? We make it simple over here. It consists of 3 parts. The first part is the charts. You make every decision, every investment, every position you take, buy or sell, based on what the charts are doing. So if you do not know how to read the charts properly, what do you think is going to happen when you start taking trades? You're going to lose money, and sometimes, worst case scenario, blow your account. This is why the success rate is so low, is because a lot of people are trying to rush into things. You got to practice, okay? Trust me, I was like that before, but I'm telling you, focus on the basics first and the money will come. The second part is your trading plan, okay? Your trading plan, making sure your emotions are in check, knowing what your game plan is every day you go into the markets. So if you do not have a trading plan, check this video out here. This is stuff that I use till this day, personally, in my trading plan. But you need to have a daily goal, weekly goal, and a monthly goal. If you don't, you need to sit down really quick, pause the video, watch that video, and then come back to this one. Then the third part is the simple math. So that's understanding how to count pips, calculating your lot size, and risk to reward. So what we're about to talk about in this video is how to use percentages in the math to grow your account, as well as we're going to explain how risk to reward comes into play. Okay. So if you don't understand what risk to reward is, it's exactly what it sounds like. It is what you're risking versus what the reward is. Again, we got to understand what we're doing here. We are trading, we are investing. So if we're going to put our hard-earned money into the markets, by the way, you should only be investing money that you're okay with possibly not seeing. This should not be your rent money, lunch money, gas money. But let's get back into it. If we're going to put our hard-earned money into these markets, we got to make sure that it's even worth the risk, because again, some trades are going to be losers. The goal is to win more than you lose and then have a good risk reward ratio. But at the same time, we still want to go for high probability, high quality setups. All these markers right here is showing you what my risk rewards are. You want to look for 1 to 2 to 1 to 3 minimum risk reward setups. We see this one here was a nice 1 to 2. This was a nice 1 to 7. This one was a nice 1 to 3. This one was a 1 to 4. I mean, 1 to 3, almost 1 to 4. This was a 1 to 4, almost 1 to 5. So again, it's very possible to find 1 to 2 risk to reward setups. We see them all over the place. So this one right here, I caught this huge golden move. This meant that whatever I risked, I made 7 times that amount. So if I was risking $100, I made $700. If I was risking $1,000, I made $7,000 in just one trade alone. And then this one is a 1 to 2. So that means I made 2 times my risk. So let's say I risked $50, I made $100. Or if I risked $100, I made $200. You see how that works? So we're about to break down step by step how to use risk reward in your favor and how you can capitalize on the entries and positions you do take to risk more while risking the same amount at the same time. I know that sounds kind of weird, but we're going to break it down, and this is going to blow your mind. By the way, I do have a free signal, free Telegram. Let me show you how we did quarter 3. So ending the quarter in September, we went 27-4, only took 4 losses that month, giving us an 87% win rate, cost 16,634 pips. And then we ended in August with 45-7, only taking 7 losses, but 45 wins, giving us an 87% win rate, caught a total of 219,708 pips, 211,933 strictly with the members in the advanced play signal room. Then we ended July 34-3. This month, we only took 3 losses the entire month, giving us a 92% win rate, caught a total of 105,389 pips. And we're off to a great start this month. We're already up 6,173 pips, 6.3 for the first week of October. First link in the description, y'all go ahead and check that out. Now let's get back into this video. So first thing we gotta do is pull out the calculator and break down the math. So first we're gonna show an example where, considering you only have one account. Then I'm gonna explain some things you can do if you have multiple accounts. Because again, I have multiple accounts. Each account I do a little bit different things on, okay? So first we're gonna do one where assuming you just have one account, and then wait to the end of the video, and then we're gonna break down what you can do if you have multiple accounts, how you can really scale and grow some money, all right? So the first thing you need to understand is how much you're trying to risk per trade. Now, I recommend, especially in the beginning, only risk 1 to 5%. Why? Because if you risk 5% of trade, you would have to lose 20 trades in a row to blow your account. You risk 2% of trade, you would have to lose 50 trades in a row to blow your account. You get what I'm saying? But also, like I said, if you're new to trading, it's okay to practice on a demo, because again, what is the rush? Why are you in such a rush to throw your money away? Let's say that you have a $200 account. Let's say you're trying to risk 2% per trade, right? So 2% of 200 is $4. I know that might seem like a small number, but again, you want to treat each account percentage wise. 4% of $200 versus 4% of $2,000 versus 4% of $20,000 is still 4%. You get me? You got to think percentages. Then those percentages will turn into whole numbers. All right. So again, we're going to do different account sizes for each example, but I'm starting it realistic because, not everybody's got a big account or is going to get a, profit from account immediately. So, I try to show examples and show you realistically what you can do with small accounts. And just for quick motivation, because a lot of people think you need a big account to make money trading. That is not true. I'm about to show you a couple screenshots. All right, so if we look right here, this is an account that I was trading myself personally. You see the balance here. I have $144 in the account right now. You see I'm up $23. So if I was starting at $100, which I was, I'm up 23% in one day right now. I scaled in multiple positions, but again, I'm doing the smallest lot size, so you can't say I'm over leveraging. And again, if we take a deeper look at these positions, there's a big space in between them. You see what I'm saying? So I'm just going to show you another photo, same account, just the next day. See, the balance is still the same, the positions are still the same, but the amount's increasing. I'm up almost 50%. Same account, same positions. I just added a couple more. I'm up 90% of my account. I literally doubled my account in 1 week. So again, this stuff is very possible, small account or big account. So imagine what I did on my big accounts. So we're about to break down exactly how to do this. So the first thing you need to do is understand how price works. So you don't understand the flow of price, I would say watch this video right here. This is going over how to identify trends and trend reversals. And then this video right here is my most recent trade breakdown, which explains basically how I trade and things like that. So assuming you already know how to trade, then the next thing you need to do is identify key price levels, which is support resistance levels. If you don't understand what those are, we're going to show a couple of examples, but I do got videos on my channel breaking it down as well. So the thing is, okay, you want to enter off support resistance levels. If you're looking for sell setups, you want to enter off resistance levels. If you're looking for buy setups, you want to enter off support levels. All right, I'm gonna say it again. If you're looking for sell setups, enter off resistance. Looking for buy setups, enter off support. So we're going to break down this trade right here. This was a sell set I was looking for on GJ at the time. All right, I was waiting for price to break this level, and I went for a sell. So my initial risk reward on this setup was a 1 to 2. So that means if the trade went exactly in my favor, exactly my way, my direction, I would have made 2 times my risk, right? So we're going to play it. Obviously, we know price went in my favor. Did a retest, treat this level from support, broke back down, treat as resistance. Bam. So now I'm up 2 times my risk. So now we're at my next support resistance level. As you can see, when we was bullish, I went for buys at the same level. So again, you want to enter sells off resistance. So what you want to do is wait for price to treat this level from a support to a resistance level and then enter another position, right? But again, just like we talked about before, you need to figure out how much you're willing to risk per trade. I recommend 1 to 5%. So let's assume that, again, we have a $200 account. So let's pull that calculator back up. We're risking $4 per trade, right? So this first position, I'm already up 2 times my risk. I'm already up $8, right? So I'm already up $8 this one position. Cool. So since we're already deep in profit, once price broke this level and it was holding as a resistance, as we can see, it's doing the retest. So this is what you want to do. Remember I said you can add multiple positions like I showed you in those screenshots, but you're still not over leveraging. How does that work? Because we trade off level to level. So we're already deep in profit on this trade. We're not going to have our stop loss at our original stop loss. We're going to move our stop loss in profit. All right, not break even, in profit. And we're going to move it to our second position stop loss. So now we have the stop loss deep in profit. So this is a risk-free trade. And then we take the same risk, which is 2% on the second setup. So we're still only risking 2% of trade, but even if this stop loss gets hit, we're still making money because we're up on our first position. So y'all see where I'm going with this now? So that first position, I'm up 3 times my risk. This second position, I'm up 3 times my risk as well. So now let's do the math. I'm still risking not even anything at all. This is a risk-free trade, but I got 2 positions that are both up 3 times their risk. So let's pull the calculator out. All right, so I got this one up 3 times, and I got another one up 3 times. So I'm up 24 bucks, right? I'm up 24 bucks. That's over 10% of my account in just 2 positions, up 10% of my account. Now imagine what 10% of your account would be if you did this right here, right? But we're not done yet. We're not done. We have another position we entered right here, right? Did a retracement, then dumped, right? So this one, I'm up 3 times my risk. My second position, I'm up 5 times my risk. And my third position, I'm up 5 times my risk. So I'm up 10%. I'm up 10 right here, and I'm up another 3 right here. So let's pull out the calculator. I'm risking 4% per trade. The first one, I'm up 5 times my risk. So I'm up another one 5 times my risk. And then I'm up one, that's 3 times my risk. So plus 12, 52. So we started at $200. We're up $252 right now. That's literally 25, almost 30% of our account in just 3 positions. So in 3 positions, we already made almost 30% of our account. You see how that works? And that's just risking 2%. Imagine if he was risking 5%. Or let me show you this. Imagine if he was risking 10%, right? So 200 bucks. That's 20 bucks per trade. So 20 times 5. So we're up 200 plus that 3 times risk. So we're up 260 bucks. And that's us risking 10% per trade. So we literally doubled our account and more in just 3 trade positions. Now I know what you're thinking. That's assuming if we can hold a trade that long. Well, that's why you go with the flow of price instead of trying to catch a bounce or retracement. You want to go with the flow and direction of price. You want to catch a lower low if we're in a downtrend and a higher high if we're in an uptrend. If y'all enjoyed this video, make sure to like, share, and subscribe. Comment down below any questions, comments, and concerns you may have. Make sure to hit that first link in the description, join a free signal room, free Telegram. If you're interested in learning how to identify these beautiful, perfect support resistance levels, hit the links in the description. I got the course. The course isn't just teaching you a trading strategy, it teaches you the secrets to the charts. If you can read one chart, you can literally read any chart. This works on crypto, options, stocks, gold, futures, indices, and of course, currency pairs. All right, I also have the advanced play signal room. What comes with the advanced play signal room? We trade all 3 sessions. We trade Tokyo, London, and New York session.